What's up everybody, Thatcher Taylor, ProPath Financial. We're going to talk about rollovers, how to do a rollover. Let's assume you've already left your employer and you've decided that you want to roll your money out into your own IRA. I'm going to tell you how to do it. I'm going to keep it simple. We're writing it up on the board. This video is going to be quick, but I feel like I'm doing 2 rollovers a week. And every time I call in, there's always questions from the client. So I always make the phone call with the client. But if you're going to do this on your own, I like self-direction. This is how you're going to do it. These are some things to think about. So, number 1, let's assume you've left your employer. In most cases, you've left your employer and you got this old 401k or 403b or 457 or TSP kind of laying around. And you're like, I want to get in my own account, lower fees, better investment options, more flexibility, more control, whatever. So you've already made that decision and that you've decided to roll the money over. So you're already there. This is what's going to happen next. You need to look at your breakdown in your 401k of pre-tax, post-tax, and after-tax dollars. This is a big one. You need to look and you need to have a good understanding if the money in there is pre-tax, if it's Roth 401k dollars, or if it's in a third after-tax bucket. The reason for that is to make sure that you open up the proper receiving accounts. This pre-tax bucket is going to be a rollover or a traditional IRA. This post-tax bucket is going to be a Roth IRA. This after-tax bucket, you can distribute portions of it to the Roth or to your own taxable accounts. But you need to make sure that you have the corresponding accounts open and ready to go. So let me explain. Where your 401k held could be a Vanguard, Fidelity, Schwab, any sort of provider or administrator, and they're going to potentially have the ability to open accounts really quickly and do these transfers very quickly. If not, if you're using another firm, say your 401k was at Fidelity, but you want to move to Vanguard, or you're at Vanguard, you want to move to Fidelity or to TD Ameritrade, or you hired an advisor to help out with that and the advisor uses a Schwab custodian or some other LPL type firm, you are going to utilize a little bit different of a process than if you're just going to try to transfer the money internally. To find out the specific procedure, you're going to do number 5. You're going to make a phone call. You're literally going to look at your statement of your 401k, and usually in the top right hand or the top left hand corner, you're going to see a phone number that you can call to talk to a representative. All these firms all have a call center with a group of people that can help coordinate all this and answer your questions. That is number 5. I make this phone call with my clients all the time. Okay, so let's say you make the phone call. What do you do next? We're on step 5. What do you do next? You're on the phone with someone. You're going to request a rollover. Not a distribution, a rollover. Most cases, we want these rollovers to be non-taxable events. There are some other caveats that can be thrown into place if we're going to use it for something else like the rule of 55 or whatever. But in general, most people want to roll their money out of a 401k and not incur any taxes. So we don't want to do that. So just like we said before, if you have pre-tax dollars, you're going to go into an IRA. Roth 401k, you're going to go to a Roth IRA. After-tax bucket could be split up, and your individual that you're talking on the phone can help with that after-tax bucket, but I don't see many people using the after-tax bucket, which is misplanning opportunity. If you need help with that, you let me know. So you're going to request a rollover, and they're going to say, no problem, I can help out with that. Have you received our notice? And you're like, what notice? With Fidelity, they'll send you the notice, and they'll just say, hey, did you receive it? Yeah, and it's a tax notice that you're going to want to potentially review. I worked with a company yesterday. It was Empower. Empower, you're crazy if this is your process. But they say, hey, client, we're going to send you a notice. And you say, okay, no problem. We were at the end of the transaction. And they go, well, have you read through the notice? We're like, no, we've been on the phone with you. Well, you got to hang up and read through the notice and call us back. Not all firms do that, but that notice is going to be read to you or sent to you or something. So that notice is going to come into play. After you say, all right, I want to roll X amount here and X amount there, and all the money's going to come out of the 401k, what's going to happen is you're going to complete the transaction. On the check is going to be made payable to the new firm. This is a big one. This right here is a big one. You're going to receive a check made payable to the new firm for benefit of you. That's extremely important, so we can classify this as a direct rollover, not an indirect roller, a direct rollover. So the money, even if you got the check, you can't cash it. You're gonna then forward it on to the next firm that holds the new accounts that you created. So the check will be sent to you. You're gonna forward it on to the new firm, and I have all my clients do this. I have every client do this every time, so there's no mistake, there's no error. The processing team is not perfect. I have them add a letter of instruction in the envelope. So you receive the check, $100 million. Just kidding. Your 401ks aren't gonna be $100 million. But say you have a $1 million 401k and you're gonna get this check. It's gonna be made payable to TD Ameritrade for benefit of Thatcher Taylor. Sometimes they'll put the account number on it, sometimes they won't. It's gonna be signed. You're gonna take that check, you're gonna put it in an envelope with a piece of paper that says, please deposit into account number 1234567 for a 2022 rollover. When the processors receive that and see that letter of instruction, they'll take the check and they'll deposit into your account as a rollover. The direct rollover made payable to the company for benefit of you. That's a non-taxable event. At that point, you can invest it or use it. I suggest maybe not using it, hopefully only if you need to, but most likely invest it based on your long-term goals. So again, just to review, you call the person, you request the rollover, they're most likely gonna send you a check. Sometimes they won't, depending on the process. They'll do some things electronically, especially if you're keeping with a firm like Fidelity. You'll request the check, it'll come to you, it'll be made payable to the company, you take the check, you put it in the envelope, you send it back off. That's how you do a rollover. But here's the big key that you need to take with you. If you have any questions, make a phone call. Call the firm, ask how to do it, make sure it doesn't deter your taxes in any way, or talk to your financial planner or a CPA to help out. But this is how you do a rollover if you're moving money from a 401k. Thanks for watching.